After 8 years of trading, this is still one of my favorite high reward to risk scalping setups. It's called the weakness rectangle setup, and it uses one simple rectangle to catch the first sign of reversal early before everyone else. It works on all pairs any time of the day. And in this video, I'll cover the basics, the steps, examples, and some tips to help you get even better trades. I'll also give you a free ebook with all the details you need at the end of the video. Let's start. Okay, so I don't waste your time and you know what you're getting. If you're looking for one-to-one reward to risk trades, then this video is not for you, and there is nothing against that. But this setup focuses more on trades like this. You take a trade and that's the profit you get, about 5-to-1, sometimes even more. And there are also other times where you have losers, and that's part of the game. That's what actually every setup has. So if you prefer something with high reward to risk, mechanical, repeatable as well, and only focused on one rectangle or one box for the entry, then this video is for you. Now this setup works on every market and any time of the day. That means you can use it on NASDAQ or S&P 500. You can use it also with gold, euro dollar, pound dollar, and all of the other forex pairs that start with a USD. And you can also try it with the cross pairs. And also it works on Asia, New York, and London, meaning that you can take this trade any time of the day, and we'll be using the 15-minute time frame as the main time frame, and then the 1-minute time frame for the execution. So I want you to think with me here on how everyone almost trades reversal. So what they need to see is that we fail to close below a low, and then we have a breakout structure. That means now we have a range from here to trade the continuation. So this is the first sign of reversal. But if we go deeper and deeper, or even before, so before this happened, some people would be trading based on this candle, or as the beginning of the reversal. But we're going to be focusing on the very beginning of a reversal, and every reversal starts with something unique here, which is a wick. Now this wick here, if we go also here, you will notice that it started with a wick, and wick can be happening in different forms and different conditions. Not every wick you'll be able to trade, but we'll focus on one that we can actually trade, which is this one right here. So what a lot of people would do is they'll be waiting for a breakout structure and then a retracement, and maybe entering here. So an entry, maybe a limit order here with a stop loss here, and then take profit 1-to-1. What you can actually do is enter before everyone. Yes, it's going to be a bit more risky, but it's going to give you much higher reward to risk. And even if you were against the trend, you'll still have this move, and sometimes price will go lower, but you already got your high reward to risk from this trade already. So the beginning of a reversal is always a wick, and that's where you're going to be entering. At the beginning of the weakness, at the beginning of the reversal. So you enter here, and we're going to be drawing a rectangle, going higher, and even some people would be entering here, but you already took your profit. And before we go into the tips and the examples, let's understand the first sign of reversal, which is the weakness. So if we zoom in here, and what I want to see is whenever we have a low, I want to see a bearish candle taking the low but closing above. And this needs to be a bearish candle. Now, yes, you could be also entering with a bullish candle, but to apply the setup, the specific setup for today, you need to have a bearish candle. In the other scenario, okay, if I have a bearish candle here, and this is a high, I want to see this high taken with a bullish candle. So this needs to be like this. And that's where the first step is. Now, one thing to mention is that a lot of people are having success with the rectangle method, but it's a small part of what I'm teaching now in Edge School, the Edge model, my setup. So if you think that you need something more universal and something that works on different time frames, then Edge model is here. There are people making 10-hour trades, 20-hour, and 12-hour, 18-hour. These are the types of trades that I take in Edge School. If you are interested in this, the link is in the description. Now, one thing I also want to mention is that there are two methods to trade the setup. There is a method of basically trying to trade based on every single high and low, or every single weakness. So the moment I have a weakness here, I'd be entering, and the moment I have a weakness here, I would enter here. But that's not going to give you the best results. We want to focus more on quality more than quantity, meaning that I want to have a smaller number of trades, but the result is going to be much better, meaning that I would only focus on high probability scenarios, taking a trade from here, going lower, and I will not be engaging with this, and maybe have an entry from here to here. So now go into the chart There are three main steps that we need to follow in this setup, and each step could be followed in a different way. And I want to be honest with you here. The more you focus on the high probability conditions and the more you master the setup and the more you apply your experience, you'll be having better results. So I do recommend that you practice something before you just apply it and then expect a result from the first day, which is never going to happen, and you'll stay in the same loop. So going back into this, the first step is derivation, and derivation could be seen in different ways. So it could be simply looking for a structure. So I could simply say, you know what, I'm looking for structure lower, and the structure itself is going to be my direction. That is right. You could be using a moving average, a VWAP, a daily candle. You know, you could do this your own way, but I'll give you one simple framework to follow here, which is focusing on one fresh range. I want to see price break in structure, retracing immediately and staying inside the range. This gives me a fresh range, and I can trade based on this. And this range needs to break a structure, needs to have weakness at the top. Now this is one way. Or if you simply think that you are trading with a trend, then yes. If you think that you're trading bearish now, you could focus on highs. And if you're trading bullish, then you focus on lows. So it could be as simple as that. I'll show you different ways of doing this. So based on the whole move here, I think we're pushing lower now. So what I can do is look for, and that is the second step now, is look for a valid high or low. And when I say a valid, and that's something that we're also going to be covering on the tips, but I'm going to give you an overview of it. So what I want to see is I want to see a high being taken into a key level. And one of the easiest key level to use is an imbalance. So I can notice that we do have an imbalance here, and that is partially filled. And I can notice that we're actually pushing lower. I don't have a fresh range here. There are a lot of movement here. But then I can notice that we do have this move going lower from here to here. And we fill only a small part of the imbalance, and then we continue lower all the way until here. And then we start going higher. And the moment we go above this high, we fail to displace above, or we fail to close above. And we had a rejection, mostly from the 50% of the imbalance. That is, for example, a valid high. So let's also look at this one right here. As we're pushing higher and we have a range from here to here, and we're staying inside the range, going lower, and this is not into an imbalance. But what I can see is that we have this low being taken right here with a bearish candle, meaning that this is a potential setup here. Now we're going to be taking this as an example. Now some people would be asking, why not this? Because this one was taken with a bearish candle. And because this is a high, it needs to be taken with a bullish candle. As an example here, another one is here, taking this with a bearish candle. So taking the low with a bearish candle is a valid one, and we could have an entry here. But if you watch the video until the end for the tip sections, then you will know why this is not the best and the highest probability condition. Now using a replay, what we can do is after this, after closing bullish but below the high, that's where you have the confirmation and you could be looking for the entry. The entry is as simple as this. You would be looking at the closing price of this candle all the way until the high, all the way to the high, and then you'll be switching to the 1 minute time frame. And it's going to be simple. Now here you could be doing your own thing. What I mean is that if you want to look for a break or structure, then yes, you could do that and have a limit order here. But the easiest one and the most simple one is simply a closure below the rectangle. So this is the rectangle that we draw the box. The moment we close below, that's your entry. Okay, so playing the price action, let's see. We close bearish. Yes, some people would be looking at an entry here. What I'll do a lot of times in order to have the best entry is wait for a retracement and a stop loss above the rectangle right here. Going back to the 15 minutes, I'll be looking for the next either SNR level or the valid low or valid high. So I might be targeting this. I might be looking for this level here. I might be looking also for this imbalance. So let's say we're going to be taking here and then let it run after. So let's see what happened. Price goes lower, and that's a huge one. I mean, this reached a 15-1, an insane one. But in this case, I don't think price retraced back into the entry. So yeah, so in this time, price closed lower, and you would be deciding between either waiting for a retracement or just simply entering at the closure. A lot of time, if you want the safest entry and entering every time, then you'll be going here, entry here, market order, stop loss above. And that's also still going to give you a very high reward to risk. So taking a look at this, an 8 to 1, targeting this level. Okay. Now, if we take a look at this one here, and after taking the low, drawing the rectangle, as simple as that, go into the 1 minute time frame. The moment we close outside the rectangle, this is not a good closure for me. So playing the price action, that is a closure. You would be entering from here, or you would be looking for the retracement. So retracement for me, some people would be looking for this imbalance. Some people would be looking for this SNR, okay? And then stop loss below the rectangle and targeting the next 15-minute high or low. Or you could be targeting, for example, a fixed 3 to 1 or 5 to 1. So 15-minute time frame here, you could be just targeting this, playing the price action. Notice what happened. It fills that level and even that imbalance that I've talked about. I think price went there. So yeah, if you went to the imbalance, 50% of it, you would get filled here, stop loss below. You could be also doing this back to the 15-minute time frame. You would be taking some partials here and then letting the rest run. That is an insane trade. And this is your dollar here, and for me it works better on the forex pairs, maybe because this is my main thing and that's what I'm used to. But let's notice this, and I really want you to also focus on Asia session high and low, because if you understand the direction of the market on the higher time frame and then observe the high and low of Asia, and then whenever we have weakness around that, that's going to give you one of the best valid setups. So for example, this here, taking the high of Asia and failing to close below. So drawing the rectangle here and then back to the 1 minute time frame. Let's notice what happened in the price action, closing lower. So yeah, already this one is a valid one, and I don't think I need a retracement here. Stop loss goes above the rectangle and maybe targeting, because this is a strong leg here, we might be just targeting this, a 4 to 1, okay, going lower, back to the 15-minute. So we make it faster here, in the price action, a retracement, and then going lower. And going back, I can see the same setup happening around Asia high as well. And as I said, one of the best setup is always trading off an imbalance when we fill only part of it. So if you notice, we fill part of it, we go lower, and we have a closure above, and then a continuation to the upside. Now, this is not going to be happening every time, but whenever it happens, it's a high probability. Notice also here, and you would also notice here that we take the high with a bullish candle. So this is valid. Maybe it's not the best one, but it's still valid. Now, in this case, if you enter somewhere in here and then your stop loss goes exactly at the high, you would be out. If you put it slightly above, as we've done with the previous trades, then you would be safe. And that's what you can get out of this. And even sometime, if price is not ready to move, you're still getting this move to the downside. So you still enter somewhere in here and you get a move to the downside until here. So at least you could go break even before price reverse and take your stop loss. So there are two main things that I want you to understand from this. The first one is the weakness is the first sign of reversal. So understand this. And then the second thing is the rectangle method. So the moment you have a weakness, okay, so for example, something like this, you can be drawing the rectangle and have an entry. Now your job is to decide what are the key levels that you want to enter with. The moment you have this, you add these two and you have a trading plan that you can trade based on. As well as one more thing is the direction. How do you decide and identify the direction? Is it by the structure? Is it by a moving average? Is it by a VWAP? Is it by volume profile? Whatever you want to do. Now, 3 quick tips that will save you from some losses. Now, one of them is the size of the wick. So this is valid and this one is valid, but which one is better to trade and why? Some people would say this because now you have a bigger rejection, but there is a downside to it, which is you simply enter here, your stop loss goes all the way here, and even if you want to trade the next high, it's not going to give you anything. But in this case, if you have this size of a rectangle and then you enter here, your stop loss here, your take profit goes here, and that's already huge reward to risk. The big rejection tells me that we are actually confirming the reversal much more than this one, but this one is going to give me higher reward to risk, a smaller stop loss, and a better trade to take based on the math. The second thing is the structure. It's much safer, and not only better, but it's much safer to trade on a fresh range, meaning that if I have already a breakout structure here, now this becomes a fresh range, because after that, as we go lower, we did not have that market section shift happening on the way. So now I do have a minor structure going lower and a minor structure, or maybe the external is going bullish, but then the internal is going bearish. But in this case, we have a breakout structure immediate retracement, and then maybe a continuation here to the upside. So it's safer to trade this, but you can trade both as long as you're understanding what you're doing. And the last thing is every weakness, in order to validate it, it needs to be happening off a key level. This could be an SNR, a fair value gap, or an imbalance. This could be a volume profile. This could be anything, but it needs to be happening into a key level, because the moment we have this, we now have two things happening at the same time. We have the weakness and we have the push from the key level. And that's how you can actually focus on high probability trades. So that's it for today's video. Make sure to check out It's School, my community, if you want to learn my trading strategy and trade with me. Hit the like button and subscribe. That's it, and I'll see you next one.